YouTube, how y'all doing today? I know, y'all wasn't expecting this, but I had to step it up a little bit. Um, I had to go and get a camera and show y'all who I am and what I look like, and I'm not just like some AI. And my content would be a lot more flavored or more raw if I was to show myself and uh, things that I do while showing myself, if that makes sense. But in today's video, I'm gonna be doing a part 2 on the first video that I did about Chart Fanatic. Chart Fanatic, and then showing y'all like a whole lot of like successful traders and choosing your own strategy to get comfortable with and allowing yourself to experience trading. Now in this video, I will be pointing you towards or guiding you towards what platform I use and which market I trade. And let's get straight into it. I would like to say that I have not overall like much, well, as I'm looking at it right now, most of my videos that I posted previously are like a year old, so there's some of them I will be redoing, and I'm obviously going to keep the old ones up just to show like progress as I continue to post and grow. But with that being said, let's get right into it. First and foremost, okay, boom. Let's get straight into this. Make sure this is good. Shit like this. Okay, so alright, so what I use is called Trading View. I use Trading View to look at the chart. As of right now, they do have a sale going on for Trading View, and I do have the basic, I think it's the basic plan or the second plan of Trading View. They offer a lot of plans to go over with. I have this one, not this one. I have the plus. I think I have the plus, and anyone could become. Anyone could. You could just have the essential and not the plus, unless you're like a professional. You work at a broker, or you're trading for the top dogs. I say go for premium and ultimate, but you don't need. Me personally, I don't think you need a lot as a beginner, and as I've worn the shoes of a beginner, I made the horrible mistake of I don't have, actually, now that I'm reading it, I don't have the plus. I only have the essentials. You save up to 80%, blah 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 blah. I'm gonna just keep it beginner friendly. Okay, so boom, I have the essentials. I would recommend to you can get it, but I would highly recommend that you get it during like a sale period. Like I think I got mine on Black Friday, and it really like helped me along a long way. Let's get straight into it. So we're gonna go to the super charts. Assets that I trade are NQ, YM, and gold. And I also look at the micro version of NQ and YM. And essentially, NQ is NASDAQ 100. I trade futures. I think what would be the best definition of futures trading? I trade futures, but I think it'd be great to get a good, accurate definition of futures trading. So futures trading is the act of buying and selling standardized, legally binding contracts that obligates two parties, a buyer and a seller, to exchange an underlying assets such as commodities, currencies, or stock indices at predetermined price on specific futures date. Unlike purchasing the asset itself, spot market, futures traders often do not take physical ownership, instead closing out their positions before expiration to profit from price fluctuation. And then it breaks down all of the other information that's available to it. But yeah, I'm gonna just keep it simple. I trade NASDAQ YM and gold. I should be trading oil, but I haven't really get involved with oil. And the reason that is, I don't want to overwhelm myself when it comes to trading. You never want to overwhelm your charts unless you're like a pro. And I can't really speak for the pros. They do what they do. But me personally, I think that trading less assets and focusing on one, and after you get more comfortable with one, you go and do the other, is properly, it's good for you. And then within TradingView is connected to brokers. They have right now I'm signing up with my paper. I signed in with the simulator version of it, but I trade with Tradeovate, and I've been trading with Tradeovate for quite some time. In my old videos you'll see me like demonstrate chart setups and how I like it. In all honesty, I like both. Sometimes I use both for execution, but for quick execution I would go to Tradeovate and execute. TradingView just has better chart. The visual is more better for me. I like that. I also like Tradeovate, but I would pick TradingView. So I connect them together, and they I connect them together, and both of them just works. They both work in synchronous. With that being said, now that I've shown you the broker that I use and the platform that I use to do trades, we can quickly go over the strategy that I picked. Like I said, so now that I picked our strategy, what the strategy is built for: day trading, futures, forex, and crypto. You can also use this to swing trade and hold positions for a longer period. But in the futures market, if you don't have the huge margin, you can't hold position in the futures market. But in the forex market, you can. What am I missing? In the futures market, no, I think that's it. Yeah, that's it. Okay, so the overview of the strategy. The strategy is built around the idea that price seeks liquidity, and that retails traders often get trapped around often gets trapped around highs. Blah, 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 blah. This strategy is built around the idea that price seeks liquidity, and that retail traders often gets trapped around key highs and lows. Instead of entering trades before price hits liquidity, this playbook waits for the market to run, stops, takes liquidity, and then trade the reversal after the trap is formed. The concept is simple: buy below the lows and sell above the highs, but only when those lows or highs have a respective structure and moved away, forming clear resting liquidity. The key is to use liquidity to determine directions, entry, invalidations, and targets. The strategy rules: direction of buys. Use liquidity to determine buys. If a high is respected and price moves away, there's liquidity above it. That suggests the market may return there eventually. Bullet point number 2: don't trade unless liquidity is built. Wait until the price has taken liquidity or form an inducement before planning a trade. If a big move has already happened and left no clear highs / lows with liquidity, there is no trade. Now, buy setups and sell setups. We can look at, honestly, they're both of the same thing, but opposite ways. So number 1, identify a low. This is for buys. Buy set of rules. Number 1, identify a low that was respected and caused the price to move away, creates liquidity below. Number 2, wait for the price to return and wait for the price to return and trade below that low. Look for confirmation, internal structure, false reaction. Buy below the lows, never above. Place a stop loss below the lows that just got taken. Target liquidity at the highs, especially highs that were respected. So highs that were back to number 1, highs that were where price didn't take and it just stab at it and move away. You can target those. And then for the sell, it'll be the opposite. So if market is going down and it didn't fully go down and it stabs at a previous point where it didn't take out the below the low, it moves away. You would have to wait for the buys to get trapped, wait for some type of confirmation. Then after that got taken out, you enter the trade to target the lows. Same rule, but just flip it to the opposites. Execution. Execute after liquidity is taken, not before. Use market execution once the highs and lows is taken and the trap is confirmed. Always cover the last highs / lows with your stop. Don't refine entries too much. Keep it simple. Management. Only move your stop after Only move your stop after price moves in your favor and forms a high or a lower high. No break evens, stops, unless partials have been taken. Don't take partials at arbitrary or multiples, R dash multiples. Takes them only at actual liquidity targets, internal or extended. Let trades run to meaningful areas. Don't cut trades early unless your system says so. That all depends on the trader, but like I said, that all depends on the trader in the moment, if you understand what you're doing. And yeah, pros and cons of the strategy. As a beginner, all the stuff they're talking about, yes, it's good to take in consideration. Pros, let's just read the pros. Pros: clear direction, simple and logical, it's fractal, strict rules, eliminates noise, fits any assets, no indicators needed. True, no indicators are needed for the strategy. But I would like to argue, or I wouldn't even argue. Sometimes, I get curious and I always try to get creative with it. And I would use indicators, but as of lately, I've only been using 3. One to determine the market sessions, and the other one is to show me untapped imbalances. And I think it's one more. Candle overlays. It shows a bigger time frame, and then while I'm in the lower time frame, so like a 4-hour candle overlay, just showing me on the side of the chart, just showing me like what's happening in the bigger time frame, and I'm in the small time frame, just trying to piece things together. Yeah, I don't think we need to watch trade breakdowns, entries, etc. Like this is why this video is for. So moving forward with this portion of this video is to demonstrate. How the strategy works, and how pretty much how would the strategy apply to what we just read and went over with. So let's get straight into it and watch the clip.
What's going on, guys? Welcome back to another inter-equity trading video. Today is going to be a money one. We're going to be talking everything and anything to do about liquidity. Everything I have learned over the course of years and thousands of hours of looking at these charts. So please sit back, grab that notepad, and take as much notes as possible, because I'm going to be pouring my brain into you guys. All right. So leave a like, a comment down below of future videos you want to see from us. Turn those noties on. Enjoy this one.
Yay.
All right, guys, we're going to be talking about NQ, and I'm going to be showing you guys the true power of liquidity, only even using the higher time frames, not even hopping into the lower. We're going to be on the daily time frame right now, and we're going to break down all of the price action in front of us right now, and also we're going to unfold more as we move on. Let's talk about this big sell-off we've had. We can actually even hop onto the weekly here. The market kind of topped out here and printed a top, you could call it, right? And you can even see we have equal highs. So I'm going to mark on this high right here, and I hope we can all agree why. We have a reason to mark on this high. I'm not just plotting on a random high. Look how we have this high respecting this high to the left-hand side. That is price communicating to us, telling us we have left liquidity at the high. So look at this.
Remember the rule of price, when the candle goes up and the next candle comes up and doesn't like go above it but stabs at it, it leaves resting liquidity. There's liquidity being left at the market. Also vice versa. So previously, if we was to look back at it, we can see that price would form a high. It would form like a high right there, and then it would move and respect this low, would leave liquidity. Then price would move higher, which is breaking the other high, move higher, and then came back down, respected this low. This market's just building liquidity, and then it repeated the same process, and then stab at the low, respected this low, and then continued to move up. And then it repeated itself till the conditions are met and satisfied at a point. Also here too, price, you can see price stab. So after the highs, it came up and respected that high, and it took the internals, and now it's going for the externals liquidity that's in the market. So yeah, I just wanted to pause and explain the video. I'm sorry. I wanted to, yeah, I wanted to pause and explain what's happening.
I plotted it on, not because I'm predicting it, because the market has literally communicated to us. And remember, this is the weekly time frame. So check this out. For 1, 2, 3, 4, 5, 6, 7 weeks, we had a rapid sell-off to the downside. Think about the mentality, the mindset of the retail trader seeing this kind of move to the downside. It's going to entice them. It's going to induce them to continue selling, whether that's going to be continuations, whatever way they trade, they want to be selling this market back down. Now, we have to view it from the perspective of why did this move occur? If you look to the left-hand side, we can all agree that we have all of these lows built up in the market for us. And if you continue following them, check this out. This wick right here tapped into something on the left-hand side. Now, this low tapped into something on the left-hand side. So this is like, you can call it like a chain, whatever it is. This is all liquidity here. And look, if I mark this red box on, you can see that we have tapped into this area as well. The market was building liquidity for weeks, months. All right, and then finally, big sell-off to the downside. What was the purpose of it? What was the intention behind it? To clear all of this liquidity. Okay, if I draw this line on, it'll make even more sense. And now check this out. What do we have right below? Hope you guys all see this by now. A liquidity block. So
a liquidity block, just to give you like a quick breakdown of what a liquidity block, essentially a liquidity block is an area where price was respecting and then it moved and it cleared the liquidity area. Yeah, it cleared the liquidity area, and now that area should be invalid for price to move back down to. That should be an area where it's pretty much voided or no, like price wouldn't come to it. It would stab at it and it would proceed to go chase the opposite liquidity. Yeah.
We can plot on a blue box. Look how the market taps into this area. And that is where that bottom in the market is found. We trap all of the buyers above this low.
Trapping buyers below the lows, meaning for every time, I'm going to keep this as simple as possible. For every time market, so these lows, for every time market tries to push, come back down, we have buyers pushing it back up. And it's leaving liquidity at the area for every time buyers are consistently pushing market back up.
Into an LB at the extreme, and look at that reaction coming out of it. 1 week, 2 week, and then finally this third week, look at this bullish closure.
And I do want to say that as I'm like recording this and I am reacting to this video and like also demonstrating the strategy or like just showing a glimpse of the strategy at the same time, I myself is teaching or learning at the same time. You never know what you will you think that you are a good teacher. No. Well, what am I trying to say? What I'm trying to say is that you never know you learn something unless you can teach it to another person. But even then, teaching it to another person, you learn something new within teaching the other person. I just probably just gave y'all a twist brain trying to explain what I'm trying to say, but let's just get back to the video.
Right away, guys, I hope you guys are starting to see more and more of this, but your eyes should be back to these highs. Okay, that is the only logical liquidity point I can see in front of us right now. These equal highs set for us. Okay, and remember the intention behind this.
Oh, and this strategy, it's a big part. It's more logical than having it to be pattern. There's no such thing as patterns. You have to apply logic based on the knowledge you know. You have to apply that knowledge in the market to form your own story, to know where your bias is at or where liquidity is at, to take a trade, into the trade, and leave the trade. It's not no like pattern trading, if that makes sense.
This move from high to low was to induce sellers to the downside. We need to be buying back up. Remember what I always say, if this trap move to the downside occurs, any bearish moves, deem them to be false, use them to find a buy opportunity back up to the upside. So this is the weekly time frame. We're not going to be taking entries off the weekly, so let's hop into the 1 hour and the 4 hour, and we'll start breaking down a bunch of entries on the way back up. Okay, so ever since we tapped into this higher time frame liquidity block, which is going to be the blue box, we can just drag this over to clean it up. We reacted, we get a pullback to the extreme, and then boom, we find momentum, and that continuation starts coming in. From there, we get another little pullback, we tap into some imbalances, and continue to the upside. Now, if I mark out this area that we've tapped into once, look at this, right? And I mark the whole high, drag it over. Remember what we talk about all the time about where liquidity is. We're not predicting, we're letting the market communicate it to us. So look at this, this high respects this whole area here, telling us that we now have liquidity above this high. So that's a great confluence. Use that to your advantage. And if I play price forward a little bit, okay, look what we have done. All right, I hope everyone's starting to see this, but we have built a shit ton of liquidity. Look at this, guys. This is the 4-hour time frame. Can you imagine how many people are getting screwed over in this type of price action? Range, respecting lows, respecting highs, still trading in this whole area, this whole trap area. This is good though. From our perspective, with our system, we want to see this occur. We want to see this build up in the market. We now view this low to hold liquidity, right? And if I open it up on the 1 hour, you can see why. Again, we're not predicting, it's literally communicating it to us.
One thing I'll say also too is if you notice how on the I think it was on the weekly and then he shrink down to the daily and then 4 hours and 1 hours. Notice one big key difference. Whatever happens on the high time frame also happens on the lower time frame, meaning it's fractal. And the best way to describe it is so in a higher time frame, everything is condensed. But when you like go to the 1 hour, everything is spread out and you see more details. It will happen. Like I said, what happens in the higher time frame happens below the lower time frame. It just would take the same confluences but multiple like extra details per se. Yeah.
To us, we have this low respecting this low and going long back up to the upside. Okay, so that's why I have plotted on this blue line right here. Perfect. Now, if you look over to the left as well, you can see all of this has been tapped into. So this is all liquidity as well. You could even mark on this. And coincidence, right below, we have a liquidity block. We don't have a reason to run this low. Why would we run the low? We just took out a level of liquidity here and then we went bullish. Okay, so I don't view any liquidity to be below this low. We have liquidity to the upside. We have a reason for us to push higher. We have a buildup of buyers. Okay, and we have a liquidity block below. Perfect. Everything checks the boxes. We need to be taking an entry once the liquidity is taken. So boom, entry, stop loss, and don't forget about our targets, guys. These equal highs left for us, done on purpose, will be all the way back at the extreme. Okay, all the way back at the highs. Now let's hop into the 4 hour, and we'll start unfolding price.
Example number 1.
So look at that. Rapid sell-off to the downside, inducing sellers, but not only inducing sellers, trapping buyers. Okay, once those buyers are trapped, again, that's when we are interested in buying this asset back up to the upside. Okay, we'll clean up a couple lines here, but that is going to be entry number 1. And the easiest way to manage that.
Telling you, man, ever since I discovered this strategy's been my bread and butter. I've not looked back once. I will say that I'm still I'm not as advanced as I want to be, but I'm like at the doorsteps, like 3 steps away to like just tapping that doorknob and then just getting in there and like being where I want to be with the strategy. Yeah, like bread and butter.
This very easy, very simple. Is as soon as we take out this high, we can all agree that liquidity has been taken. So manage your risk. Maybe it's roll it to break even or just tuck it below this low. Nonetheless, when these highs are taken out, you need to be managing your position. Let's play this out a little bit. And just like that, we run those highs. So now we can BE this 100%. We can all agree on that. All right, let's remove this line as well. Okay, and we're going to go back to the hourly time.
BE means break even. So essentially what break even means is, so you see how he has like the green part as like market moving towards a direction, and then the red is where like the area. If price goes outside of the box of the red, you're out. You get stop loss. You get out. You get kicked out of the trade. You lose the trade. But if price continues to move up and it hits a point where like you have marked out and it's partial, that would be like a partial point. You can break even and let the trade run out. So what you would essentially would do, you take that red box and you would move the price up to that black line right here and then break even essentially.
Time frame here, perfect. Okay, so now our entry number 1, it's played out pretty nice. We've taken out a high from the left-hand side. Since we have taken out that high, remember, we got to be BEing this. You can't just be holding it full volume and not be break even. So BE here, I think we can all agree what's happening in front of our eyes again. Let me drag this red box over. Another buildup of liquidity. So let's follow along. Buyers induced after taking out this high, buyers trapped. This is where a lot of people make mistakes. Just because we have taken out this low here does not mean we need to buy right away. That is pattern trading. We do not do that. Look what the market does. We print this low and we go long. Remember, sellers are induced, right? Sellers are selling these areas. Look what the market does for us. It reacts off it to build liquidity. So there's liquidity above this high now. This is not an area we want to be selling from because we have taken out this low. That's something you need to identify. Just because there's a reaction does not mean we need to be involved in it. And we start getting a reaction back down to the downside. Right away, look where your eyes need to go. Back down to this low. Why? We have liquidity here. Same thing, look, high taken out, low, respecting low. That means price has literally told us, it's confirmed to us that we have liquidity below this low. Wait for price to come below this low, and would you look at that? We have another liquidity block at the low down here. If I drag this over, the only issue with this liquidity block, guys, is look how big it is. We would have to enter here, and our stop loss would have to cover the whole low. Now, we're on the hourly time frame. Check this out. We have another liquidity block, a refined area right here. Okay, and this is only using the 1 hour time frame. Okay, but you can see how price takes out this high, takes out this low, leaving a liquidity block down here. So we can use that as a level to put our stop loss. So that shrinks our SL quite a bit. Look at this. And this is all doing this on the higher time frames, by the way. Of course, your RR can be much.
This is an example. This is not ideal. He's just showing you how the strategy would work. Unless you're a big baller and you got money like that, you can cover that whole area. But if you're like a beginner or like someone like me, I'm not doing that. I'm waiting for some type of like confirmation, an area where I know like, okay, there's no more liquidity. This right here should be valid. But remember, this is just an example. Yeah, let's just keep watching.
Higher if you use the lower time frames to refine after, but that's not the purpose of this video. So entry here, same target, back up to the upside, just like this. So let's see what happens here. So remember, we induce buyers. We want to see price below the low again. And boom, we get tagged in, and price starts continuing to the upside. All right, rinse and repeat. Okay, so now this entry moves up to the upside. Remember, we've taken out this low, inducing sellers. So any reactions at the highs, deem them to be false. Now, I skipped a little bit far ahead, but maybe you guys can test on your own here and see what I see. But look, induce buyers, we trap them. Look at the engineered liquidity we have at the highs. Okay, I hope you guys are starting to see this on your own now. And what do we have right below? Go to the 15 minute to kind of open this up a little more for you guys. We have another liquidity block right here. Price takes out this high, and then price takes out this low, boom, LB. So we can take our entry. As soon as price stabs out this low, anywhere below this black line I have marked on is a valid buy. Why? LB below. So that provides us a level to put our stop loss, just like this. Let's clean up a couple of these lines. Entry would be like this. And as soon as price takes out these highs, roll your stop loss. Boom, just like that. And targets, everything remains the same. Don't forget about that higher time frame narrative. Let's drag this target all the way back up to the highs, just like this. Remember, every single bearish reaction is only going to provide us another opportunity to buy this asset back up. Now let's play this out a little bit and see if we can find any more entries. All right, so the market.
Okay, boom. This purpose of the video was to just show you how the strategy would work and how it would be applied. I know this could be a bit confusing to others, and most others might pick it up like that. Me personally, I was a lot confused, so that's why I went further into watching a lot of his videos on his channel before I went and purchased the course. And like I said earlier, I've never looked back. I stayed consistent, keep applying the strategy. I paper traded, I live traded, and then now I'm looking. I've gotten a lot of certificates with it, but a lot of flaws. Like, I have a lot of flaws when it comes to trading, and I'm working at those. I've slowly been maturely been like trimming them down, and yeah, I never look back. I'm actually on a way to get an account. I recently got an account with the strategy, and I was up in profit. I could have waited like 4 days to get paid out, but like I sold the bag, man. I sold a bag, and now I'm just back at that stage where I'm soon to like pass another challenge, and this time around I'm gonna be recording and posting when I can. I'm gonna be recording and posting when I can about the strategy and when I do take my trades. But yeah, the purpose of this video was to show you the platform I use, the trading view, Tradeovate, and the strategy that I use. Next part will be platform I use, and it's actually this platform right here, but this it's not for this video. Next video I'll show you what platform I use, and we can indulge further with the strategy. And one thing I'll say for sure is that backtesting, in the beginning I didn't love backtesting. I'll show you in the next video what backtesting is, and I'm just going to talk about it. In the beginning I did not like backtesting because it didn't show what market could do, because you can never control what happens during backtesting. Does not sometimes, like, it's not the same as live market per se. So I would show backtesting, and then I would show clips of doing the trades live, and yeah, just get better, get 1% better at trading. And also with YouTube too. I've not been consistent. I'm looking to be consistent, and yeah, I'll see you in the next one. Nice to finally see y'all, or per se see me, and I'm looking forward to progressing even further. Thank you for watching. I'll see y'all in the next clip.